Welcome to the Kelowna Real Estate Podcast. I'm your mortgage broker host, Taylor Atkinson.
And I'm your real estate agent host, Matt Glenn. What's happening today, Taylor?
We got some big news. It is a solo episode with both of us.
Yeah, it's a dual solo episode.
Yeah.
Get used to it, people. What's happening?
Yeah, what are we talking about today, Matt?
Well, we've hit a milestone in Canada. 41 million people now live in this country.
Wow.
That's a lot of people.
Yep.
Not a lot of houses. So I think the long-term trends for real estate prices are up. But as of right now, this has been a tough year, as we all know. And because of that, Taylor and I have 5 tips to take advantage of the real estate market in 2024. That's what this episode is.
Yeah. So buckle up, get your pens and notepad, and we're going to dive straight into it.
All right. This episode, like every episode, is sponsored by the best brokerage in town, Century 21 Assurance Realty. It's my brokerage. It's where I started. It's where I'm still at. And I love it. If you're an agent looking for a change, maybe this market's got you down and you need a little help, a little boost from your peers, Century 21 is a brokerage for you.
Okay, first up is having an abundant mindset.
Yes.
What we mean by that is not trying to time the market. It's time in the market, not thinking too small. So when we're talking about having an abundant mindset, we want you to be able to analyze properties without being emotionally invested and having some data to back it up. But we just don't think you should try to penny pinch and, come in with massive lowball offers because you might just offend the potential seller. It goes the same with rates. A lot of people have been waiting for rates to come down substantially for a long time. Projections are that, we will see some rate decreases, but they may not be as big as people are hoping. And financially, it may not impact you that much. So if you need a place to live and you're paying rent, then you should probably just buy a place to live. Much like if you're looking at buying a rental property and fundamentally it makes sense, you shouldn't be trying to save a couple $1,000 and sit on the sidelines next 2 years. You should just find something that makes sense and pull the trigger.
It's funny how psychology works, as I learned being an agent over the years here. When the market is going up, everyone thinks it's just going to go up forever. And when the market is going down, everyone thinks it's going to go down forever. It's kind of funny that we just have such short-term memories about those kinds of things. The market is down right now, clearly, but I feel like 2024 is a year people are going to look back on and being like, I wish I would have bought some real estate in the year 2024 because of the opportunities there are now. If you look at the time graph in the Okanagan buying a house, like we are rarely ever in a buyer's market. And when we are, it's like down there for a couple of months at a time. And right now we're kind of at the bottom of the balanced market, kind of into buyer's market territory. But it's only a matter of time before it just zings right back up into the seller's market. We just talked to about 41 million people in this country. We're not slowing down. It's not going to get any smaller. We're not building houses because of the interest rate, because of the market. Building has slowed down a bunch. So we're basically just postponing the next boom for the next few years. Like we're going to have a shortage of houses again. I just feel like there needs to be a bit of a come down to earth with the real estate market. Exactly what Taylor said. Time in the market is way more important than timing the market. And saving a 0.5 point on your interest rate now, like it sounds good, but like if you have to wait 2 years to get there, is it really worth it at that point?
Yeah, no, that's a good point. Like, I think what we're talking about is having an abundant mindset, and it's not FOMO. It's not like, hey, just dive in for the sake of diving in like people were doing 3-4 years ago.
Yeah.
So yeah, very good point with that.
Imagine buying a house 20 years ago. Do you remember 20 years ago what exactly the market was? Like, was it a buyer's market? Was the prices up a bit? Were they down a bit? No, you just know that your house is double or tripled in value over those 20 years, right? So I feel like real estate is very much a long-term investment. When you start buying real estate to flip or buying it and selling it in 6 months or a year or 2 years, that's when it gets risky because nobody knows what the market's going to do in that amount of time. But everybody knows that given enough time is 5, 10, 20 years, it's almost certainly going to be worth a lot more than it is today. And you're almost guaranteed that there's going to be worth at least the same as it is today. Taylor, I know, bought a investment property of his right in 2008, still made money on it. So like if he can make money buying a condo in 2008, I think you're pretty safe to buy something now. What do you think, Taylor?
Yeah. And I think we have to remember too, like for most people, buying is their owner occupied primary residence. It's a shelter cost. Like it is needed.
Yes.
There are certain times in the market where potentially renting would be, more affordable. But, historically, it's always been the right decision to buy something. it is kind of a known asset class that is going to increase. People have no problem buying a $80,000 truck and driving it off the lot and instantly losing money and having a, monthly payment that is equal to their mortgage payment. But some people have a hard time just pulling the trigger on a property that, they need to rest their head and get some shelter.
And like, as long as the numbers make sense, whether it's your personal residence or rental property, as long as you can make the payments, it doesn't really matter what the outside market is doing for the time that you live in the house. Right. And even if you're going to sell and buy, you got to sell and buy in the same market. So I agree with you totally. Like I always tell my clients that buying a house is a financial investment, but it's also a personal investment. Like you have to live in this house most of the time, right? Unless it's a rental property. But even then it's a bit of a personal investment. But like you're going to live in this house. So like if you like a house, if you like the yard, you like the way the bedroom is, you have your ensuite bathroom so you can stay away from the family, be by yourself for a few minutes a day. Like these things matter to people. And like if you're just not going to ever do it because you think the market could be better, it just doesn't make sense logically. That's why I want to drill down. Like it's almost like as a collective, nobody wants to buy until the prices go up. It doesn't make any sense when you say it out loud, but it's what people are waiting for is for the prices to go up before they jump in, which does not make sense in most cases.
Yeah. And this is what I mean, with our topic with abundant mindset is try to think really, really long term. What Matt just touched on there is nobody wants to buy when the market's down because they're afraid to lose money, right? If you bought a house a couple of years ago at $1 million and now it's going to sell for $950, you're like, I'm not going to sell my house until it goes back up because I can't lose money on it. But every other house around you has also gone down by that much value. So if you're staying in the market, don't think of it as you're going to sell and lose money.
Yes.
Or, when the market's up, you don't want to sell because then you got to buy something that's more expensive. If it's a personal choice, just find out what is your priority in life and make it happen. So next topic that we wanted to talk about is owning your primary residence. Now, Matt and I obviously are pretty heavily invested in real estate in all aspects, but this is just to us the thing that will generate the most amount of wealth in your life is owning your primary residence. Yeah, it's pretty hard to do right now, but the government has come out with some recent policy changes. First home savings account, RSP being increased for the allowable limit that you're allowed to take out as a down payment. Property transfer tax exemptions being increased. And then, capital gains exemption on your primary residence. Hopefully that sticks around forever. But with capital gains going up on other investments, going from rich dad, poor dad, I don't want to say like owning your primary residence is an asset. I wouldn't classify it as an asset, like in terms of net worth, but it is a investment vehicle to store money and to store capital and watch it grow, as well as double dipping and having somewhere to live. So you're not paying rent. Right? Yeah, you're paying interest, but at least you're paying down some principal as well, and you're getting some tax benefits. And then to top off that as well, you can turn your primary residence into some house hacking. You can get something with a basement suite. You can rent it out, add a lot of value to it by doing some little home renovations. So if you don't have that first home yet, that is the number one move to make, I think, in 2024 is buy primary residence.
And think about right now, like right now in our market, we have high interest rates and lower prices. So right now is the highest your payment is going to be, right? So like when you go in to buy a house, the interest rates are not going to go up from here. If anything, they're going to go down or stay the same. So when you go in to buy your first place or a place, like that's your payment. And over the years, it's going to do nothing but get smaller and your principal is going to get paid off faster. So like right now, I hear a lot of comparisons like, well, it's cheaper to be renting. It's like, yeah, in the short term, it might be, but in the long term, you are in a fundamentally different position after 20 years of renting and owning a place. Even if that place you buy in a studio apartment for $300,000, which we'll talk about in a bit, but like they exist. And for 5% down, you need $15,000 to buy something like that. Or to buy, if you need a 2-bedroom, you can get them for $400, $500. So you need somewhere between $15,000 and $25,000 to get into the market and set up like for the rest of your life. To me, it feels like that should be the goal for everyone who doesn't own their primary residence, is to get into something like that.
Yeah. And I mean, even to top that off, like the first home savings account, the government is giving out free money here. As much as we talk poorly about some of their decisions they're making, like first home savings account.
Hey, how does that work? Explain to us how that works, Taylor.
Yeah, it's kind of like a tax-free savings account, right? The limit right now is $8,000 annually. So you throw in $8,000 to it.
Yeah.
You can take it out the very next day and you get a $8,000 tax write-off personally. So a couple does this, there's $16,000. right away you're getting a rebate back from the government. So they are coming out with these programs to try and incentivize people to buy their first home.
So like, let's just drill down in a second. So $16,000 a year that you get back, but you're basically adding 30% to that because your tax rate, right? So you're getting a 30% more than that because you're not paying taxes on that amount to buy your first place.
Yeah, it acts as a tax-free savings account. You're investing in that account to basically build up a down payment. And then when you take the money out as per the down payment, yeah, you just get that write-off instantly against your personal tax bracket. Depending where you are, obviously it's going to be more powerful for some people in a higher tax bracket. But to utilize something like that, that's free money. Property transfer tax exemption, obviously on a sliding scale. But if you're talking about those condos in that $300,000, $400,000, $500,000 range, instantly, you're not going to have property transfer tax as a first-time home buyer, and then not paying rent. It's just kind of a win-win.
Like either way, you're going to have a monthly housing payment, right? Rent or principal residence.
Yeah.
So yeah, you have to pay interest. Sucks, but we're all doing it. But you're not paying rent and your mortgage is getting paid down and your property is appreciating over time. Might not appreciate this year, might not appreciate next year, but over the years, it is certainly going to.
Yeah. And I think we've always said this is if you can qualify, go out and buy a property. You never know what's going to change, if rates are going to go up, if the government's going to come out with some kind of restriction on amortization. But if you can qualify for a property and you have that pre-approval, go out and buy, because if the rug gets pulled out from under you, or, something happens with employment and you don't have that consistency for a couple months and then you lose that approval and then you're back at your job. Yeah, just buy when you can.
So I just want to jump in on here one thing. So like if you go on social media, on Twitter is the worst, but all of them, actually TikTok's pretty bad too when you hear anyone talk about any kind of real estate, is that the world is falling. It's the worst time ever to buy. Like Canada's in the drain. Don't ever put your money here. And it just irritates me so much to read that. Not because I'm offended by what they say. Like I don't really care what they say. But I know people that are very conscious. That generation is reading those things and just they're getting scared off of buying, and they're basically giving up their future because of these stupid comments that are just endless on social media, and they're just getting terrible advice. Like just look at the people that have money in society and they all have real estate, right? So why would you listen to these comments about now is the time, like the cliff is coming? No, it isn't. I just feel like it's bad advice and it's actively hurting people that listen to it. If somebody's really conscious, maybe scared to make the first step, and then they go on there and read 1,500 comments that the sky is falling, it's going to change mine. And that's what's so irritating about reading stuff like that online. So I think real estate is probably the safest investment that you could ever do. And you got to live somewhere anyway. So you might as well pay for the place where you're living instead of renting it from somebody else.
Yeah. Our next topic kind of goes hand in hand with this one, is buying a rental property. It's been a little bit more difficult the last few years to buy rental property.
Yeah.
Reason why is just, our debt service calculations on how we can approve people, and rents don't really, cash flow where we need them to justify it. Say in the Okanagan, there are certain places, call Alberta, probably one of them. But to buy your owner occupied, you could live in it for 2, 3, 4 years, like however long you want. If it's a $300,000-$400,000 condo, and then you leapfrog into that next property, you can always convert the one you just bought 3 or 4 years ago into a rental.
Yeah.
Right. It's not like, hey, you bought this, you're locked into it forever. If the market goes down by $10,000, you're going to have to sell it at a loss to then buy your next house for your family. There's a few exit strategies there. If there's equity in it, you can refi it. I think that's probably the most powerful thing that people have done to build their portfolio is they buy one house, call it a $500,000-$600,000 house. It goes up in value by, 10, 15, 20% over a few years. If there's equity there, you can draw out up to 80% loan to value of that equity. Tax free, might I say. It's not a taxable event, so there's no capital gains on it. You can then deploy that money into another property if you can be qualified for it. And you can either buy a new property, which is a rental, or you can convert the one you're in, which would be a rental. So that's kind of the most powerful part of this, is to leapfrog and buy one more property, because you want to put the equity from one of those properties into another one.
Yeah.
There's tax advantages to it. You don't have to then liquidate and sell that property and pay a huge amount in tax,
And like the cost to move, like you don't have any of that.
Yeah.
So yeah. Another thing is that you can get an insured mortgage. Like you can get a less than 20% down. Like it's not just your first house, it's your principal residence. So you could live in your first house, even save up the 5% or however much 10% it is, whatever you need for the down payment on your second house. And you could either break your first mortgage and do that, or just save up another down payment to do that again and just not sell your first one and just start like leapfrogging and leaving 5-6 houses in the wake over time, right? That you just own and you just never sold.
Yeah.
So like there's a lot of strategies here to really let your net worth take off over things that are just going to be existing anyway, right?
Yeah. And I think, when buying that next property, if it does have a basement suite and you turn your first property into a rental and then you buy another one with a basement suite,
yeah.
and then maybe you finally get that dream house as your third house. Well, great. Now you have 3 rental doors. You house hack through all of them. The only thing I would say is just fundamentally analyze deals, make sure it works for you, make sure you have a contingency fund that you're able to, carry the debt if you have any vacancy for a couple months or if there's any repairs that you need to do. Going back to like an abundant mindset, think on a larger scale. Don't go and try and buy a $200,000 property if you're approved for a $500,000 property. Maybe buy 2 properties or maybe buy that $500,000 split level rental property. And go with the flow of the government, as much as it pains me to say it. They're preaching, hey, we want densification in transit locations. We don't want short-term rentals. Like, just read what the government's pushing out. Go to some of these public hearings and, follow what they're saying. Buy the product that they want to see built. And a lot of that right now is purpose-built rentals. People have been super successful. Do we think that market's probably a little bit saturated? Yeah. But, if we were listening to the government and CMHC and MLI Select 10 years ago and people were building these purpose-built rentals, well, you'd be sitting pretty happy with yourself right now. So, yeah, unfortunately, I got to say it, but yeah, listen to where the government's directing this.
Yeah, it's only going to make things easier for you.
Okay, next topic, working with a team that you align with. So I think Matt and I are both pretty passionate about this. And when we're talking about a team, we mean everyone from a real estate agent, mortgage broker, accountant, lawyer, contractors, pretty much anyone in this transaction, appraisal companies. You just want to find people you're aligned with. You want to educate yourself enough just to be able to sift through and find the right people for you and that have the best interest at heart for you. I'll highlight somebody right now. So I think lawyers are super important. Some transactions are pretty cookie cutter and, notaries can carry out no problem. But we're talking about, say, lease land property specific to West Kelowna, which there are a lot of lease land properties. Instantly, if I see that come across my desk, I'm going to Barry Pirelli. Like, the guy has literally written most leases in West Kelowna. He knows them inside and out. Things like that can absolutely kill a deal for you. So just find the right people, build that team, and give them some trust and ask questions, but don't try and question their best interest if you feel really aligned with them.
Also, every deal is nice and fun at the start, right? So like if you hire a notary because you want to save $500 at closing, things don't go south at the start. They go south later on, right? When you move in and something's wrong. Like, it's nice to have firepower like that at your back. You regret it sometimes if you don't. So I think that's a great one to use a lawyer that you like, respect for your transactions, but I think that's a huge one.
Yeah, it's an insurance policy.
Yeah.
Right? Like, some of these people are going to cost a little bit more money.
Yeah.
If you want to do a private sale, feel free, but it may sit on the market much longer. You may not get as much money for it. Private purchase, there's really no reason not to be represented. It doesn't cost you any money.
Yeah.
You're getting access to a real estate agent that can bring up comparables in the area and analyze what that property's worth. If you want to take it one step further, like, you could go and hire an appraisal company, pay them a few $100. There's lots of professionals that are really good, and there's a few that are not so good. So just get educated enough to figure out who's good and who's not and work with them. Same with mortgage brokers, like, there's a lot of great mortgage brokers out there. We generally work with most banks, credit unions, monoline lenders, and every product's really specific to an individual, right? We need to figure out, if you're looking at refining or breaking or selling that property in the next few years, how to calculate the interest rate differential. Maybe you're best to go into a variable product and not a 5-year fixed, or maybe a 3-year fixed. Every scenario is so different So just find those good people you want to work with and also try and add some value to their life, right? It's not just a one-way street. Like if you're working with a lawyer, yeah, you're free to ask questions and they're going to charge you a little bit of money for it. But, also try and be grateful and maybe give them a referral because you never know when you're going to need them again.
They're not going to charge any money to ask them questions like that. It's all included in the price, right? So yeah, same with your mortgage broker and your agent. So like fire away, ask all the questions you need and they're there to help you. I think that's great advice. All right, Taylor, let's talk about opportunities in this market. Where are the opportunities?
Yeah, we really like pre-sales right now.
I think pre-sales is a major opportunity in this market, honestly. Look at all the buildings. They're all offering incentives, whether it's low deposits, 10% down, 5% down, 0% down, which we'll talk about in a second. But think about this. Let's take Water Street by the Park. Right now, they're selling 2-bedroom unit for $679,000. Beautiful unit right downtown overlooking the lake. You can buy it for 10% down. So you put down $67,000 or call it $70,000. You think about it, 2026, you have to close on this property. So by then, the interest rates are going to be lower. The market is likely going to be a little hotter right now. Obviously, we don't know for sure what's going to happen there. But you're locking into this property that you don't have to close on for 2 years for 10% down. And you don't have to pay any monthly fee during that time. And you get a beautiful property in the middle of Kelowna. People are going to be kicking themselves for not buying in that building, including myself. Honestly, full disclosure, I'm actively working to buy a unit in there because I just think it's such a good opportunity. So Taylor and I were just talking about, we saw in Revo is offering studio apartments right now, starting at $289,000 for 0% deposit, closing in, I think, was it 2025, Taylor, or 2026? Basically not closing for a year or so away for 0 down. That is an unbelievable opportunity. You have to be careful. You still have to be able to close on that property. So you will need to save up to 5% down to buy it and get approved for a mortgage sometime between now and when it closes. But these are opportunities that just don't happen when the market is cooking. And then you can fully take advantage of the market right now.
Yeah. We also love upsizing right now. We kind of touched on this earlier, is like when the market's down and you need to sell your house, or this can go into point 3 is turn your current place into a rental and upsize. But upsizing is awesome. The market's down right now, or it's a little flat.
Let's think about this logically. Let's just call the market down 10%. Let's just say that. I don't know if it is. Let's just say it's down 10%. And you have a $600,000 townhouse and you have a $900,000 house. 10% means it's down $60,000 on the townhouse and $90,000 on the house. So you just made 30 grand selling one and buying the other, or moving out of one and buying the other, even though they're both down the same percentage, right? So upsizing right now is a great way to take advantage of the depressed market. Also, some products are selling way better than others. For example, townhouses. They're like one of the products in the Okanagan that is actually pretty hot to buy right now. So if you have a townhouse to sell, you can sell it when the market is high and go buy a single family property that isn't as hot right now and save even more than just the regular 10% down, because the townhouse might not be down at all and then the single family house is 10%. So not only the difference on the prices, but also just the difference in the products gives you a huge opportunity to take advantage of right now.
Yeah. And again, tax, you're avoiding capital gains if you're going to ride that appreciation wave. So if you can afford that larger house and maybe it even has that basement suite, hey, upsize, get the basement suite for the rental income, help get the approval, and then ride the appreciation, hopefully tax-free in the future.
Yeah.
The other one we really like is buying condos with furniture in them.
Yeah, this short-term rental thing has created an interesting opportunity for first-time home buyers. You're a first-time home buyer and you want to go buy a place and you don't have any furniture or anything. Imagine this, a market full of properties fully furnished on the market for sale. How often does that happen? These are the things that if you work with an agent, they could tell you about. These are the opportunities that you can take advantage of. If you go look on Sunset in Kelowna, there's a lot of listings down there, right downtown, one of the most beautiful streets in Kelowna. And there is a ton of listings right there. And probably 30% of them are coming furnished.
Yeah, you're financing the furniture, right? Amortized.
Yeah.
So you don't have to come out of pocket.
Yeah.
I'm actually thinking about making an offer on Matt's house and I want him to include the Tesla so I can finance that.
Yeah.
There are these little opportunities in the market. It just circles back to that main one of being abundant, finding the opportunities, not opportunities in terms of taking advantage, but adding value. People that are selling Airbnbs that are furnished.
Yeah.
Well, do they want to sell it furnished and be headache free and get a little money for it? Or do they want to sell it, unfurnished and then have to sell everything on Marketplace and deal with all the crazy on Marketplace? So
they might not ever sell on the Marketplace. They might, but they might not.
Yeah.
And if they're selling their previous Airbnb unit, it's coming furnished.
Yeah.
Almost certain. right? It's just not worth it to try and get rid of that stuff elsewhere. So that's a major opportunity. I think that would help out a lot of people.
Yeah. So just to quickly recap those 5 points: abundant style mindset, owning your own primary residence.
Yeah. So time in the market is way more important than timing the market. Like real estate's for the long term, right? So if you're going to be in it for the long term, it's always a good time to buy real estate.
Owning your own primary residence, lots of good benefits there.
Yes.
We know it's a little bit difficult sometimes to get into the market,
but not impossible. I feel like we're overstating how difficult it is. It's not impossible. You need to save about $15,000 to get in. Like that's kind of a $300,000 harder place.
Yeah.
That's not impossible, right? So like if there's two of you and you need a 2-bedroom, you need $450. So you need like $27,000 or whatever that is. No, not even $20,000. So like it's hard, but it's not impossible.
Depending on the family situation, you can get a gift, down payment, letter. There's a lot of different situations that can help out with that.
Yeah.
Next up is buying a rental property. Obviously, we always encourage rental property purchases done correctly, analyzed correctly with good fundamentals. Obviously, we're trying to get some cash flow out of it.
At the very least, breaking even. Like you think about if you buy a property and you got to pay for it every month, like that's just kind of unsustainable, right? You can't negative cash flow every month and expect to scale. You might be able to do that with one, but it's not that great. It needs to break even at the very least. If you can make some money on it, that's actually stellar too.
Yeah. And I mean, keep in mind, you're leveraging that asset, right? You're leveraging the bank's money to buy a property. So there's not many assets in the world that you'd feel comfortable doing that. The fourth one, which I feel is probably the most important, is working with a team you align with. Just find the right people who you like to deal with, who you don't mind having a phone call with and meeting up for coffee, and provide some value to them and hope they provide some value to you. Lastly, finding those opportunities. Again, it's not like looking for an opportunity to take advantage of someone. It's an opportunity that, hey, there's something that I can add value to somebody else's life. If it's a developer buying those pre-sales, if it's upsizing, if it's buying something with furniture, just look at solutions, right? Like a lot of real estate investors have problems right now in terms of, high interest rates or having Airbnb properties. Provide them with a solution, and that comes with a monetary value of, what you're going to be able to negotiate. So look for opportunities by solving problems.
Well, that was fun. If you have any questions, please reach out to Taylor and I. We'd love to talk about this. We talk about it not only on this podcast all the time, but every day in our lives too. So we believe passionately in it. So if you have any questions, feel free to reach out.